Have you ever wondered how some people are able to get funding to the tune of hundreds of thousands of dollars while other people are just sitting around stuck trying to even figure out how to qualify and get approved? Well, today I want to show y'all how to actually make it happen. Some things that you need to know to prepare for getting funded because that's the magic sauce. I have realized over the 10 plus years that I have been in business that many people miss opportunities for getting funded because they're simply not prepared for the yes. And so I'm going to give y'all five different funding options that you as a small business owner have that you can get approved for as a business owner. That this is good for somebody that has good personal credit or maybe even bad personal credit. If you've just getting started or you're seasoned in business, I have a few options for you today. And so if you're not really sure where to go, how to apply, or how to qualify, that's what we're going to be talking about. Now, the first thing that you all need to know if you're trying to secure financing for your business is that banks are not the place for you to go to get funding. I know that seems a little counterintuitive because many people have probably told you that going to a bank is the first thing that you need to do. All you need to do is go apply for an LLC, get an EIN number, open up a business bank account, and then go to a bank and get a loan. That's actually not where you want to start. The best place to get funding for your business is by doing it with an actual broker, a person that has numerous relationships with other lenders, whether if it's with banks, traditional or non-traditional lenders. That's what a broker actually does. Over the last 10 years, our company has been able to develop amazing relationships with lenders, both traditional and non traditional, which actually makes it much easier for us to get our clients approved for the funding that they deserve. So whether if you're trying to, get a loan for your business or if you don't know how to find the right type of loan for your business, if you're trying to determine how to become eligible for a loan or a credit card for your business, or if you're not really sure how to submit an application, then we're going to talk about some of those things today so that you'll be 100% prepared so that when you apply, you can be confident that you're going to get a yes on that application. So, the first type of lending product that I think most people are very familiar with to some degree is an SBA loan. Now, SBA loan is like top tier funding. Okay. These is where you're going to get some of the lower rates. This is where you're going to get some of the most favorable terms because this is actually guaranteed by the Small Business Administration. So what happens is you'll get a lender or a bank that offers SBA loans or type of SBA financing, and the SBA basically guarantees to that lender that if you don't pay it back, that the SBA will pay them basically. So that's why it's so hard to get your hands on it because it's backed by the government. And so if you're looking for funding for large projects, if you're looking for funding for even some startup capital, the SBA can help you with doing that. So you should know that the SBA has several different actually type of funding programs, but they're mostly used for actually you can use it for a short term, but you mainly want to use it for long-term projects. So if you're looking to fund a short-term project under 2 years, under a year, then you may want to actually consider other type of funding that we're going to talk about. But with SBA loans, if you're trying to get equipment, if you're like a vehicle or machinery, if you're trying to purchase real estate, if you are even trying to acquire another business, then you can use SBA loans to do this. As well, if you're starting up a business, you can also do this. Now, the thing is, rates. You want to look at what could I get if I go to the SBA for funding. Well, you'll be able to get rates as low as 11%. You will have to pay some origination fees. So when you get funded from any type of corporation, bank, traditional or non-traditional, you do pay fees on that. Whether you realize it or not, you do pay fees. So if you find that a broker may even charge you fees for funding, it is normal in the process of funding. Okay. The SBA has a guarantee fee. So you actually pay that fee on top of origination fees. But on the great thing is with SBA loans, you can get lending up to $5 million. Y'all, look. $5 million. Now, this does not go for microloans because SBA has a program called microloans, where if you want loans under $50,000, that's the program for for you. So if you're looking for something $50,000 or more, they have programs like their 7A programs. They have a few different programs. But if you're looking for anything less than $50,000, you would be looking at a micro loan, something that is offered through what do you call them? Nonprofit intermediaries. So if you're looking for some SBA financing and you don't have perfect credit, but you meet other qualifications, then you could qualify for an SBA microloan. Now, if you want to find microloans, you can head over to the SBA.gov website. They have plenty of information about their lending products. Okay. They do have repayment terms up to 10 years with a monthly payment, which is great. It helps you really solidify your cash flow in your business. There are some type of funding options that are a little more aggressive in payback terms, but with SBA, their terms are great because you have monthly payments. It does take a little time to get funding for SBA loans, though. So if you need something that has quicker funding, SBA not it. You're looking at up to 90 days, 30 days minimum, mostly for SBA loans. So if you're looking for something more immediate, SBA is not for you. I should also mention, I think I mentioned earlier, SBA loans, you got to qualify for it. And they're pretty strict in their qualifications. You need to have at least a 680 personal credit score. Yes, they will check your credit. You need to have a mature business. So at least 2 years in business is great. You could use collateral to get approved. You don't have to have collateral. Well, collateral does help. So if you have, let's say, real estate, if you have equipment, this is collateral that you can use to get approved. And sometimes if you're going for real estate, you do also have to put down a down payment. So keep aware of that. You do have to provide documentation, my friend. All right. This is not just easy peasy walk in the bank and get the funds. No, you got to prepare, which means you need to have documentation. This verifies that you are legit. So you need to first have a loan request amount. Know how much you want. I talk to so many people every day and I ask the same question. How much funding do you need? How much are you looking for? And I am surprised at how often I hear the answer, I don't know. I didn't think about that. You need to think about it first before you walk into any institution and ask for any money. You need to have business financials. You need to have P&L statements, profit and loss. You need to have balance sheets. You need to have projections for the next 1 to 3 years about where do you see your business going financially. Proof of ownership. Do you have your LLC paperwork? All that good stuff. Certificates, licenses, a business plan would be great. Tax returns, if you have them for the last 2 years. All that matters. A lease or an agreement to lease, this stuff matters. They're going to ask for this stuff. So be prepared first. Don't go asking for something that you're not ready for. Bottom line. Now, next, you got lines of credit. This is probably one of my favorite types of funding because it gives you a lot of flexibility. Some people ask me, Jerry, should I get business credit cards or should I get loans? They both serve a purpose. Loans, they can give you that cash so that you can stay liquid. And then with credit, you can use it to become liquid, or you can use it as a line of credit to give you flexibility to use it, pay it off, use it again. And they even increase your credit limits. So I like it because you can draw cash from it, pay it back, draw cash again to help you become liquid. This is different than a business credit card. With business credit cards, you can use cash advances to take cash off of it, but it comes at a much higher fee. With lines of credit, the way it works is you draw cash from a line of credit and you can use it over and over and over again without having to reapply for more funding, which is awesome. Now, with interest rates, you can do it as low as 10%. There's no prepayment penalties with lines of credit. There is typically minimal fees, not many fees, maybe a monthly fee that you may have to pay about $20 or so, depending on the overall line of credit. You can get lines of credit or loan amounts up to 500K, and you have about 24 months or so to pay back your loan that you take from your line of credit. Normally, with business lines of credit, you're either going to have weekly payback terms or bi-weekly payback terms with some of your lenders. And then as far as funding timing, this could take 24 to 72 hours to get you funded from start to finish. So there's a quicker turnaround time for lines of credit. Now, the thing is, lines of credit aren't the easiest to get your hands of. You definitely have to be reputable in business to qualify for a line of credit. So normally they will check your personal credit scores. You need to have at least a 640 above. You need to be in business at least 1 year. And you need to be doing at least $100,000 a year in your business to qualify. They are going to ask you for the last 3 to 4 months of your bank statements. They're going to ask you information about your business to just to make sure that you own it. You know, LLC, EIN number, paperwork. Sometimes even your banks. I already mentioned bank statements, and that's pretty much it. They don't require a lot of documentation for lines of credit, but they do require some. Then you have short-term capital loans. You'll see these a lot, and you'll probably get offered these a lot from lending and loan and funding companies because it's very, very easy to get approved for these. So if you're needing some an injection of cash for marketing, for payroll, for some short-term expenses, for materials, this stuff you could get a short-term working capital loan to do it. Now with the short-term working capital loans, the interest could be relatively high for some of these types of funding options, but you can get higher amounts from these type of funding options up to $2 million. There are no prepayment penalties. You will have to pay fees for these type of loans, and the repayment terms are always going to be less than 24 months. And you're going to normally have to do either daily or weekly payback terms with this type of lending product. Very fast type of funding, 24 to 72 hours. I do want to warn some people on this one though, because I have seen some people get in trouble with these short-term working capital loans because for people that aren't generating a lot of consistent cash flow, this type of funding could hurt you. So if you're not generating a lot of cash flow right now, right? If it's not really consistent, then I wouldn't really look into the short-term capital loans until you have a real clear picture and plan about how you're going to use it to maybe double or triple your profits. If you're using it for something that's not going to generate income, that's not a good move. Short-term capital loans really should be for something that's going to help you generate more income or is going to be invested into income generating activities like sales, marketing, or operations. Those activities are going to give you the biggest return. So if you're going to go short-term capital, I would say go with the things that really are going to give you a good return. The great thing about the short-term working capital is that you don't have to have good credit for these. So you can have 500 credit scores. You need to be in business for at least 6 months, and your revenue annual should be at least 100K or tracking to be $100,000. As far as bank statements are concerned, they're going to ask you for at least the last 4 to 6 months, especially if you're new. They're going to ask you for, the info about the owner, EIN, LLC, paperwork. Sometimes they'll ask for tax returns, but normally you won't find that with the short-term lending, but sometimes they do. So just have it on deck if you have it, if they ask for it. And then if you have accounts receivable, then you can also use that and provide that documentation as well if they ask for it. Those are normally for like product-based businesses. But just keep this in mind. These are the easier ones to get access to. But this could be a really good option for many small business owners that need a quick injection of cash so that you can put that money into more prosperous places to increase your revenue tenfold. Now, invoice financing. This could be good if you are paid through invoices, especially people that, let's say, are working with the government. I see a lot of people who work with government that use invoice financing as a source for financing so they can help them with covering payroll, other expenses while they're um, taking care of a project. So a good example of this is, let's say, for instance, you got a contract with the government, and the contract was, I don't know, to clean up a building or a few buildings that they own. And you're going to need to hire staff in order to clean out these buildings and restore them for the government. Well, the thing is, you're kind of wonder, well, if I don't get paid until I complete the work, where am I going to get the money for it? Well, that's where invoice financing could work because you're going to have an invoice from the government that says, once this is completed, I'm going to pay you $30,000. Great. Well, you can take that invoice and you can offer it as collateral basically, to get funding so that you can fulfill that contract. And then once you fulfill the contract, then you'll pay back the invoice financing, and you'll keep the rest as profit. So this is a really good way to sort of get funding to complete projects and use the invoice as a way to have collateral to get the funding. So this only really works though with reputable customers. So if your customer is the government, that's a very reputable customer, and a lot of companies will definitely fund you based on that. But if you get an invoice from your Uncle Sam, who has poor personal credit and haven't been in business for a long time, they're not reputable, so you're not going to be able to get paid off on that invoice. So just keep this in mind. This could be a very good option for businesses that have reputable clients, that have good credit, and you want to leverage the invoices. And so many people may not take this route, but if you do, just know that you're going to be able to get quick funding. You're going to have weekly payback terms on this type of funding. You can get up to $1 million on this type of funding, and you have about 12 to 24 weeks to pay it back. There's no prepayment penalties, and you get a discount rate when you get funding. So normally what will happen is the company will collect the funds once you collect the fees, or yeah, for the invoice, and then the invoice factoring or the invoice financing company will pay you the rest. So basically the invoice financing company becomes the owner of the contract until they get paid, and then when they get paid they pay you out the rest. That's how that works. So it's a really good option for many people, but just something to keep in mind. As far as if you want to get approved for this, you do not need good credit to get this done because the invoice is the collateral. You must be due in the next 90 days. So if the invoice is due 6 months from now, you're not going to find any companies that are going to finance that. It needs to be within the next 90 days. And then again, you have to have trustworthy clients and customers if you want a company to use it as collateral to pay you to fund it. All right. As far as documentation, you just have to submit an application. You have to have a accounts receivable aging report. All the stuff you can actually get from your bookkeeping. So if you're not keeping your books, that's a problem. So start keeping your books, get a bookkeeper so that they can help you with that. And getting these reports are going to be so much easier. And then tax return, personal and business may be required, but not always. And then equipment financing. So for all my folks that need some equipment, heavy machinery, real estate, well, not real estate, sorry, vehicles is what I meant to say, then you can actually use equipment financing. So for my truckers, for people that want cargo vans, if you're in the transportation industry, this could be right up your alley. Or if you need heavy machinery for a restaurant or something, this could definitely work for you too. With this, you have interest rates that are low. 9.99% is where they start normally. There's no prepayment penalties. You can get up to $1 million, a little more with equipment because it's collateral, y'all. So the collateral backs the loan. So it's a little safer for many lenders. And then you are going to have 2 to 7 years to pay it back, and you're going to have monthly payments on this type of lending. And it's really going to be based on the life of the equipment that you're leasing or you're financing. And then on top of this, it doesn't take long to get this kind of funding, about 2 to 7 days if you want to make that happen. As far as approval requirements, you don't have to have perfect credit, 580 or more due. You need to have at least a 5% down payment. And the collateral is going to be the equipment that you finance. You need to be in business at least 2 years. Some startups may qualify if you have more so like industry experience, and if you also have good personal credit, or if you have business credit. So if you don't have good personal credit, you can actually establish business credit, and then you can qualify just based off of your business credit. I actually had one of my clients, Miss Laney, she got approved for 2 vehicles under the business name, no personal guarantee, because she took the steps that we taught her to build her business credit without using her personal credit. So this can definitely be done. As far as documentation, you just need to provide personal information, business information. You do have to have an invoice for the equipment. So the invoice from whoever you're buying the equipment from, just to show the price, then the cost of the equipment, and then the financing company will take care of the rest. You're going to need bank statements, tax returns, profit and loss statements, balance sheets, proof of ownership of the business. Last, business credit cards. It's probably one of our most popular programs that people come to us for, actually, are trying to get business credit cards because business credit cards give you a lot of great flexibility. On top of, a lot of them also offer you 0% rates for the first 18 months or so. They offer great rewards and perks for swiping their cards. You can get free trips, travel, free stuff. It's awesome. And they give you high business credit card limits. So if you want to qualify for business credit cards, it's relatively simple. Actually, it's very similar to getting approved for personal credit cards. You've got to establish your business credit and you've got to also have some pretty good personal credit. Y'all know how business credit or credit cards in general, they range from 7% all the way up to 29%. Some of them do have annual fees on them, so always pay attention to that. You can qualify for up to $100,000 or more. We actually got one of our clients $118,000 2 weeks ago. She was ecstatic. She was so happy because she didn't really know if she qualified. And we told her, sis, we got you. And we got her qualified for $118,000. She was happy. She took it. But that doesn't always happen. We've actually got people approved for money in the past and they've rejected it because they were scared. But business credit cards are some of the best type of funding that you'll get because it's so flexible. Many business credit cards don't have any annual fees, so it doesn't cost you to have those credit cards in your wallet. In fact, it doesn't cost you until you swipe those credit cards. And sometimes it doesn't cost you even when that happens because if you pay it off every month, you don't pay any interest. So I love business credit cards. They make me very happy. And I always encourage many business owners to get them in their wallets because you want to build your money team as a business owner to strengthen your cash flow and your business. Now, normally you need to, be in business. You need to have a legitimate business. I mean, so you need to have LLC. It needs to be completely separate from your personal finances. And you do need to have good personal credit to get approved for this. So there are some business credit cards that don't require good personal credit, but there's very far and few in between. So just focus on getting your credit score to at least a 720 so that you can better your chances of maxing out your funding options. You will be able to get approved. I'm talking high credit limits here, 20, 30, $50,000 or more. Imagine getting two business credit cards for 50K. That's $100,000 right there. Like, what could you do with that? A lot. You should know that they're going to check it. So you're going to have to put up a personal guarantee. But as long as you are able to adopt good credit habits and financial habits, it's really nothing to worry about. Really not. So you're going to be able to use this credit to further your business, further your cash flow, and set yourself financially free. And that's what it's all about. There's not a lot of documentation when it comes to business credit cards. So you just have to fill out an application and they tell you whether if you're approved or not. And it's usually pretty instant. It's an instant decision. Sometimes it's not as instant, but normally it is. So, I just wanted to impart this information on y'all because many people get denied for business credit and funding options because they just don't know what to do. They don't know where to go. And I'm here to let you know right now that if you really do need help getting funding, if you want to get it done the right way the first time, if you want to stop getting rejected and you want somebody to hold your hand every step of the way, we got you. We've been in this game for over 10 years. We've helped thousands of people and we can help you too. And we're more than happy to help you too. So what I'm going to do actually is I'm going to leave a link below this video so y'all can actually check this out. It's a copy of our 2025 business financing blueprint so that you could just keep this at the top of your mind and you'll know what you need to do to qualify. These qualifications come straight from my in-house lenders. So if you want to qualify and get approved and you want to do it through us, these are the qualifications that you need to meet. If you think you qualify, fill out the funding form below. I will leave you a link below to see if you qualify and we can move you through the process. If you're not ready yet, it's all good. We'll tell you if you're not ready yet, and we'll also give you some steps that you need to take so that you can get ready and you can get approved. And so, I love y'all so much. I hope y'all take this information and y'all really create some success with it. And if y'all need some help, hit us up at smartcreditcoach.com and we'll be more than happy to walk you down the yellow brick road to getting the credit that you deserve. So thank y'all again for joining me today. Again, my name is Jerry at Smart Credit Coaching. And if you got some good information today, just like, subscribe to the channel, and give me your biggest takeaway today in the comments. I promise to read it and reply. Other than that, thank y'all so much for joining me today. Again, my name is Jerry, and I'll see y'all next time.